Cathie Wood reveals reason why Tesla will increase 100%. In 2018, a fund manager made a bullish bet on Tesla Inc. Tesla, placing a price target that was far higher than what experts had projected, and that appeared to be rather out there at the time. That bullish price forecast was realized in fewer than 3 years, which helped solidify Cathie Wood's position as an important figure in the history of investing. This is how the investors handled the situation with her trade. Only on Trend Capital will you get all the latest updates. So let's get started then. The price of Tesla shares has dropped significantly over the past few weeks, dropping 26% from their all-time high reached in late January to their most recent closing price. However, at least one analyst believes that much better days are on the horizon. According to a note written by analyst Tasha Keeney, ARK believes that even in the most catastrophic bear scenario, Tesla shares have an absolute bottom of $1,500 for the year 2025. As a result of increased market rivalry, the price of Tesla shares has been under significant downward pressure. Established manufacturers like Volkswagen, General Motors, and Ford have, in recent years, made substantial attempts to broaden their product lines to include electric vehicles. These efforts have been met with success. Volkswagen is making steady progress toward passing Tesla in terms of sales of electric vehicles, and even though Tesla is now in the lead in this regard, Volkswagen is drawing increasingly closer to passing Tesla with each passing day. General Motors is now a long way behind both Tesla and Volkswagen, but the corporation has pledged to offer 100% emission-free vehicles by the year 2035. In the meanwhile, Tesla is currently the clear market leader. In addition, there are early indications that the new Ford Mustang Mach-E is beginning to gain some market share away from Tesla in the U.S. market. This would be competition for Tesla in the electric vehicle industry. In contrast to ARK's moderately upbeat outlook, some of ARK's detractors are skeptical that fully driverless cars are as close to reality as proponents of the technology believe they will be in the not-too-distant future. On October 19, 2021, in Beverly Hills, California, Cathie Wood, the Chief Executive Officer and Chief Investment Officer of ARK Invest, will make a lecture at the Milken Institute Global Conference. Cathie Wood has been the target of criticism over the last several months for the financial decisions that she has made, in which she prioritizes growth over the recession. As a result of rising interest rates, investors are moving away from risky bets and toward value options. As a result, her flagship ARK Innovation Fund, which was one of the best performing investment vehicles of the pandemic-ravaged 2020, with a gain of over 152% during the year, has experienced a loss of over 58% so far this year. At the end of the second quarter of 2022, the value of the equity portfolio that Wood controlled came close to reaching $17 billion. Among the most valuable holdings in the portfolio are shares of Tesla Inc. The value of the equities portfolio dropped by around $6 billion from March to June of 2022. During this period, Wood made further acquisitions in 102 stocks, as well as fresh purchases in 9 stocks, sold out of 12 stocks, and cut holdings in 223 stocks. The top 10 investments account for more than 46% of the total portfolio value. The top holdings are heavily weighted in the information technology and healthcare industries. Investors have started pulling their money out of her management because of the issues that have been occurring with her fund. Her flagship fund saw its greatest monthly outflow since September 2021, reaching nearly $803 million during August, according to statistics that were compiled by the news agency Bloomberg. Since September 2021, this was the month with the greatest monthly outflow. In addition, throughout the first 6 days of August, there were daily contributions made to the fund. The performance of her fund so far this year has not been as good as the performance of the S&P 500, which is only down around 18% on average year to date. Her fund's performance has not been as excellent as the performance of the S&P 500, and this is not an advantageous point of comparison. If Tesla is successful in providing a network of self-driving cabs by the year 2026, the investment firm ARK Invest, which is managed by Wood, projects that the price of Tesla shares will more than triple by that time. ARK Invest has reaffirmed its bullish stance on Tesla and has projected that the stock would reach $4,600 per share by the year 2026. The innovation investor believes that the present price of Tesla stock may be more than triple if the firm is successful in creating a network of self-driving cars that function as taxis. This prediction was made based on the current price of Tesla stock. According to a statement released by ARK, we now anticipate more demand for autonomous ride-hail at higher pricing points than we had initially projected. Cathie Wood wrote in a blog post that the stock of the firm still carries a significant amount of unrealized developmental potential. The innovation investor stated that it anticipates that Tesla shares will more than double to a price of $4,600 per share by the year 2026, and this would represent a potential upside of 356% from their current levels. ARK had anticipated that one share of Tesla will be worth more than $3,000 by the year 2025. ARK's bullish thesis on Tesla is contingent on the company's capacity to effectively construct and roll out a network of self-driving robo-taxis. This ability is central to ARK's analysis. According to the findings of the research that was conducted and published by ARK, that network of taxis would provide a service comparable to Uber by transporting individuals to and from a variety of locations. There is a possibility that by the year 2026, Tesla's network may generate an annual income of $486 billion, as predicted by ARK's bull case scenario. According to ARK's most pessimistic assessment, the income that Tesla's network of autonomous vehicles would deliver each year is estimated to be $51 billion. Tesla's principal source of revenue in 2021 was the sale of electric autos, which contributed nearly $54 billion to the company's overall revenue. The following is the rationale that was supplied by ARK Invest. We now expect more demand for autonomous ride-hail at higher pricing points than we had initially estimated. The most crucial issue that has to be answered is when Tesla will be able to create vehicles that are capable of fully autonomous driving, much alone a network of self-driving taxis that would be able to navigate various towns, cities, and nations. Even if things go wrong for ARK, the worst-case scenario for the firm calls for an autonomous ride-hailing taxi network to go live in the year 2026. Not only have the commercial debuts of Waymo and Cruise helped our current position, but also fundamental advancements in AI have done so, and as a consequence, our position has been stronger as a result. Based on the average of our hypotheses, it seems likely that Tesla will begin offering commercial autonomous ride-hailing services in 2024. It should come as no surprise that ARK, an investment manager, has Tesla stock in the top position across all of its exchange-traded funds, or ETFs, given that ARK is positive on the potential upside of Tesla's stock. According to statistics provided by Koifin, ARK holds a total of $1.43 billion worth of Tesla shares, and the stock is the only one in ARK's flagship exchange-traded fund to have produced a positive return over the previous year. ARK anticipates that the price of a Tesla will nearly quadruple to $2,900 by the year 2026, even in its worst-case scenario. Although tuned to our expectations for 2026, we believe that our Tesla model is methodologically conservative. We assume that Tesla stock will trade like a mature company rather than a high-growth one in 2026, ARK said. That's going to do it for today's video. Hey, please keep in mind that the purpose of this channel is not to give financial advice, and we do not recommend or encourage you to invest in any particular firm. This is how educational interaction is brought right to your front door for your convenience. In light of this, we strongly suggest that you perform an extensive study on the subject before making any purchases related to it. We are appreciative of the fact that you watched our video. Please like and subscribe to the channel so you may stay up to date with the most recent information, and until then, we'll see you soon.